Hello students, so now we will start with the practical problems for your chapter Accounting for Goods and Service Tax GST, and we will do with question number 2. Here it says pass entries in the books of Devdhar and Brothers Odisha, assuming all transactions have been entered within the state charging CGST and SGST at the rate of 9% each. Now we have already learned that there are three types of GST: the central GST levied by the central government, state GST, and along with that we have union territory GST levied by the state government and the union territory government. Now whenever there is an intra-state transaction, intra means within the state transaction, the central government and the state government gets the half share. So here 9% each means 9% will go to central government and 9% will go to state government. And the third one we have is integrated GST, which is outside the state, interstate, like the dealer of Uttar Pradesh dealing with the dealer of Rajasthan or dealer of Gujarat, or import and export of goods outside our country, India. Now here is the question given. The year is 2018. Transactions date are March 4, 7, 10 and onwards. Here is the transactions. Now the format is same as the journal, what we have learned. Journal of Devdhar and Brothers Odisha, date, particulars, LF, amount, debit, amount, credit. Okay, so let us begin. The first one is March 4. Now in March 4 it says purchase goods for rupees 5 lakh from Sunil Brothers. Now students, in this, since we will be charging the GST, the state and the central GST, now whenever we purchase, that is our expense. So along with the purchase we will have to give the GST, either state or the central GST. So normally what we do, we debit the purchases account, because according to the nominal account it has to be debited because it is expense. Now whenever there is an expense or purchase, we will have a input CGST, that will be 9%, and input SGST, both will be debited. Okay, so input CGST and input SGST, both we will debit. Okay. And since this is on credit, what we will write down? We will write the name of Sunil Brothers. Okay. Now normally when we were learning the journal entry, purchase used to be debit because according to the nominal account it is expense, and Sunil Brothers will be credited because Sunil Brothers personal account is a giver. Now here we are levying the central GST and the state GST. Whenever there is a purchase we will write input, or whenever there is any expense we will write input. Now students, this input CGST and input SGST, even though we have debited, this is not an expense. Why this is not an expense? Because whatever GST you will be paying now while purchasing, you will get it back when you sell the goods. So this is your asset because you will receive back your money. So the purchase is for 5 lakh. 9% of 5 lakh is 45,000, and 45,000, 9% each, and the total will come to 5,90,000. Okay, we'll write a short narration. Goods purchased on credit. No need to write GST charged, just a short narration. Next we have is March 7. March 7, goods returned to Sunil Brothers for rupees 20,000. Now here the goods are returning back. Devdar and brothers, they are Devdar and brothers Odisha, they are returning back the goods to Sunil brothers. So Sunil brothers becomes the receiver, we will debit. Now there is a purchase return or return outward. So we will write purchase return account. Whenever there is a purchase, it is expense, so it is debit. Whenever there is a purchase return, we are getting back the money, it is income, so it will be credited. Now over here, whatever was debited, whatever percentage was debited, the same percentage we will credit, because this is not a sale. Whatever GST we had paid while purchase, we will get it back. So we will write here to input CGST account to input SGST account. Okay, so here the purchase return is 20,000, 9% of 20,000 is 1800, and same SGST 9% of 20,000 is 1800. The total is coming to 23,600. Okay, we'll write a short narration. Goods returned to Sunil brothers. Okay, now next we have is March 10. On March 10, sold goods to Mehta and Company. So here Mehta and Company, they are becoming the receiver. So we are going to debit Mehta and Company to sales account. What we normally write, the income in the nominal account we credit. Now along with this, we will write to output CGST account and to output SGST account. Now whenever there is a sale, whatever we had paid while purchase of the goods, the GST, we will get it back. Okay, so along with the sale or any income, we write output. Along with the purchase or any expense, we write input. But if there is no sale, we are giving it away as purchase return, then we will, whatever was debited, the same percentage we will credit. Okay, so here the sales is for 8 lakh. 9% of 8 lakh is 72,000, and then here 72,000. The total of all these three will come as 94,000. 9,44,000. Next we have is March 12. Okay, before that we will write the narration. Goods sold on credit. Then we have is March 12. On March 12, here it says that goods returned by Mehta and Company. So whatever goods we had sold, now it is returning, so it will be sales return account or return inward account debit, and whatever was been credited, output CGST, the percentage of return we will debit, because this is not a the sale is been given back. This is not a purchase. So output CGST account debit, output SGST account debit, and who is giving it back? To Mehta and company. So here the sales return is for 30,000 and 9% of 30,000 is 2,700, and again here 9% will be 2,700. So the total of all these three will come to 35,400. We'll write a short narration. Goods returned by Mehta and company. Okay, next here we have is, okay, so let us bring this question down so that it will be easy for us. Okay, so here next we have is March 25, March 20, sorry, March 20. March 20, here it says goods withdrawn by proprietor for personal use 10,000. Now whenever there is a personal use, we write drawings account. Now since goods are been withdrawn, instead of goods what we write? To purchases account. Now since this is not a sale, instead whatever goods was there purchased, proprietor is taking away for his personal use. So in this case, whatever will be debited, we will credit, and we will write to input CGST account to input SGST account. Now the proprietor had taken the goods worth of 10,000. 9% of 10,000 is 900 and 900, and the total sum is 11,800. So here whenever there is a purchase, we will, what we are going to do, we are going to write input CGST and input SGST. But whenever there is a return or withdrawal for personal use, so in that case this is not a sale. So what we will do, whatever percentage was debited, the same percentage we will credit. Same for sales. Whenever there is a sale, we will credit with output CGST and output SGST. Whenever there is a return, with the same percentage we will debit whatever was credited. Okay, so we'll write a narration for this. Goods withdrawn for personal use. Okay. Now next we have is March 25. March 25, here it says goods distributed as free sample. Now the distribution of goods as free sample is done for advertisement. So we will write down here advertisement expenses account, and this we are going to debit. Okay, we'll put some space over here so that Okay, so okay, so here advertisement expense account, what is your free sample. Now these free samples are given away as free, like no charge is been taken for this, so it will be charged as expense on purchase of, like expense on advertisement. So in this case we will reverse the purchase. Now here don't get, now the other question number 26 we will do, and sorry, March 26 we will do, and then we will understand what is the difference for this. So we will write here to input CGST account to input SGST account to purchases account. So the free samples we are distributing, that is 5,000 rupees worth of free sample, and 9% of 5,000 is 450, and here again it will be 450, and total is coming to 5,900. Okay, so here let us do March 26. March 26, paid advertisement expenses. Advertisement expenses account, debit, input CGST account, debit, input SGST account, debit, and this is paid by check. So we will write down to bank account. Now advertisement expense is your 20,000. 9% of 20,000 is 1,800, and again here same 1,800, and the total is coming as 23,600. Okay, now if you see here also we have written advertisement expense because this is a free sample. Okay, now this free sample we have written as advertisement expense, but here we have written to input CGST because this is from the purchase we are taking it. This is not an extra expense, we are just taking from the purchase and giving out as free sample. So we will, whatever was debited with the input CGST, that percentage of input CGST and input SGST we will credit. Now in March 26, it is actually an advertisement expense for the sale, and so whatever expense we have to debit because it will be charged with the advertisement expenses. Okay, now let us write a short narration. entry sample given, and here we will write down advertisement expenses paid. Okay, now the last question here, it says that payment made of balance amount of GST March 31. Okay, now in this journal entry, first we will have to do the working, and depending on the working we will have to do the journal entry. So let us do the working notes. First we will find out the total input CGST and total input SGST. Total input CGST. Okay. So here what we will do is whatever input CGST has been debited, we will do the addition for those, and whatever input CGST has been credited, we will minus that. This was been paid and this we are getting back, so we will minus. So we will first start with all the input CGST. So 45,000, then we have here 1800 will be minused because this is credit. Then again here down, if we come, 900 also will be deducted because this is on the credit, and then 1800 will be added, and here again 450 will be deducted. So let us write down. We have got 45,000 minus 1800 minus 900, 1800 minus 900 minus 450, and we have 1800 that will be added because that is on the debit side. Okay, so that is coming to rupees 43,650. Now in the similar way we will find out the total of input SGST. The figures will be same. $45,000 minus 1800 minus 900 minus 450 plus 1800. So this will come to 43,650. We'll write rupees in front of this. Okay, so here we have got 43,650. Now next what we will do is we will take out the total of output CGST. Now here whatever is been debited, whatever is along with the sale, whatever was been credited, that we will add, and whatever is been debited we will minus. It is opposite of input CGST and input SGST. So here we will write down, we had 72,000 minus, there was a return of 2,700. So that will come as 69,300. This will come same. Total output SGST both will come with same amount, 72,000 minus 2,700. So your output SGST comes as 69,300. Okay, we will write rupees over here. Okay, now if you notice here, your output CGST is more than input. So here, since output GST is more than input GST, we will have to pay the net GST, the net CGST and net SGST. Now input was when we purchased, we paid this GST. Output, when we are selling, we are earning this GST, which has to be paid to the government. So here what we will write down is, we will find out the net CGST paid and we will find out the net SGST paid. So first we'll find out the net CGST. So that will be your total, that will be your total output CGST minus your total input CGST. Okay, so this is the formula. Now how much will be the amount? The amount will be, your total output CGST is 69,300 minus, and your total input CGST is 43,650. Okay, so this is coming to rupees 25,650. Okay, we will write rupees over here. Now same will be net SGST. So the formula will be same. Total output CGST minus total input SGST. So your total output SGST is how much? 69,300 minus 43,650. So this is coming to rupees 25,650. Okay, so we will write rupees over here. Okay, so here you can see that in this what we got our total output CGST and total output SGST were more than your input CGST and input SGST. So whenever the output GST is more than input GST, like whenever you earn more out of the sales, you have to pay back the net amount. So here net amount is coming to 25,650 for the central government and 25,650 for the state government. Now let us write down the journal entry. The journal entry will be output CGST account debit output SGST account debit to input CGST account to input SGST account, and the balance has to be paid, so to bank account, and here the balance will be paid 25,650 plus 25,650. Okay, so here the output CGST was 69,300. The input was 43,650, and when we add these two it will come as 51,300. Okay, so we are done with the question. So whenever the output is more, we will have to pay the balance amount. So here the balance amount is coming as 51,300, 9% of which, half of which will go to the central government and half of which will go to the state government. Now let us make this look a little better. So here we have all borders, and then we'll total both these sides. Okay, so we will total on both these sides. Okay, so on this side it is coming as 17,72,900. Okay, 17,72,900, and same on this side also. On the credit side also, let us check. On this side also it is coming 1772,900. 1772,900. Okay, so here students, whenever we have to charge the GST, along with the purchase we write input, along with the expense we write input. But if we have any return, or if there is any fire loss, or if there is any free sample, then we will, whatever debit we will credit. And same with the sales. With the sales we credit the output, because that is what output we are going to get while selling the goods. Will get our GST amount back. So in this question, our total output GST and total output SGST were greater than the or more than the input CGST and input SGST. So in this case, the excess amount will be paid as balance amount. So in the next question, we will see what will happen if the total output CGST or total output SGST is less than total input CGST or input SGST. Okay, so go through this and have a good day.